big banks are basically prohibited from extending credit or even offering bank accounts to Bitcoin mining companies. The banks are not able to hold Bitcoin on their balance sheet as an asset. Who are the big players that are missing from the Bitcoin sort of world? And I would say the number one is the United States government. Once the US is involved in it, then the banks get involved in it.
Thanks for tuning in again to Hosting Bitcoin. Today we've got Colin McVicker. Colin's a corporate attorney at Winston Strawn. He's been advising clients on commercial and alternative lending with an emphasis on asset-based, cash flow, midstream, reserve-based, and crypto loans as it applies to us. And I'm not sure, Colin, if you're truly a Bitcoin maxi, but I know you've got a passion for it and definitely a deep understanding of how digital assets can be used as collateral when secured in lending transactions, and specifically with a focus on the Bitcoin mining space, which is how we got acquainted, and super excited to be working with you and your firm. And would love to dive into not only your story, but all that we can provide as value for how people can get into this, avoid the most common mistakes. Anyway, welcome to the show. Happy to have you.
Oh, thanks, Bo. And we missed you down in Dallas at the North American Blockchain Summit. How was Canada? You strike any deals up there?
Canada was great. We had the whole marketing team up there. We were doing a social selling summit where we're getting better at communicating the message of Bitcoin, the message of Bitcoin mining, and making it more accessible to investors. But wish we could have hung out, and for sure we will in at least a couple months next time I'm down in Texas. But at least starting out, Colin, I'd love to hear your background story as not only how you got into Bitcoin, but where you are right now at Winston, what you're working on.
Yeah, sure. So one thing I'll say is just it's a very interesting story. I guess I'll start, from the beginning. I'm from Chicago, and I went to University of Illinois for undergrad and my master's degree. Decided to go to Washington University in St. Louis for law school. What I didn't appreciate going to WashU was that it's a very much so national law school, and the feeder into Chicago, where I'm from, to the law firms is very competitive. And when I was graduating, I wanted to work at the big bad Chicago-based law firm like Winston Strawn and Sidley, Kirkland and Ellis, and they basically hire one person for each of those law firms from WashU, and I wasn't one of those people. But I did get a job offer at the number one law firm in the state of Texas. That's called Vincent and Elkins. And for your listeners that don't know, that law firm V&E, they for over 100 years have just dominated the oil and gas space. And so that's like Enron, big Houston oil and gas deals. And for probably 7.5 years, not all I did, but primarily was just doing oil and gas upstream and midstream loans. And with the midstream and the upstream sort of market, two banks dominate, and that's JP Morgan and Wells Fargo. So I spent most of my legal career doing Wells Fargo, oil, and then gas loans. So we were all over Texas's three basins. That's Eagle Ford, Permian, and the Haynesville Basin. We were up in Pennsylvania with Appalachia, and then Montana with the Bakken Formation. And through one of those oil deals, I actually came across Bitcoin mining. So the story with that was there was a giant Wells Fargo loan. It was like $1 billion loan to the largest oil driller in Montana called Kraken, not the crypto Kraken, which your listeners I'm sure are very aware of, but the oil driller Kraken. And we closed the deal. We represented Wells Fargo, and about a couple months into the deal, Kraken comes to the lawyers and says, "Oh, by the way, we have Bitcoin on our balance sheet." And Wells Fargo was like, "What in the world is an oil company, doing with Bitcoin on its balance sheet?" And the story for your listeners that don't know the story. So when you drill oil, you get oil, but then you also get gas. That's why it's called oil and gas. Well, if you're in the middle of the Bakken, which is in the middle of nowhere, you can just put the oils and barrels and put them on a truck and drive them to wherever you're getting sold. But for the gas you would need a pipeline, and there's not a lot of pipelines that are up there. And because you can't let the natural gas just leak out of the wellhead into the atmosphere for state regulations, so like burn a hole in the atmosphere, that state regulators make you do something with it. And what do you do with it? Well, state regulators are saying you should light it on fire or flare it. And when you flare it, so that's uh, nobody's making any money on flared gas. And a Bitcoin mining company called Caruso, which I think started up in North Dakota, but they definitely have operations in Montana. They went to Kraken and said, "Hey, all this flared gas you're doing? Well, stop flaring it. We'll actually take it from you, convert it into electricity at the wellhead, and mine Bitcoin using it." And to me, that's like a no-brainer, right? Where if you're otherwise flaring it, which is a huge pain, and you have to report this to the state regulators and so forth. So Kraken thought it was a good idea, and they entered into the program. And the natural gas flaring, part of this. So we could have a whole podcast just talking about flared gas. But if you don't believe me that it's real, drive to the Permian Basin at night, and you literally don't even need your headlights. There's so much flared gas. So, anyways, the deal was, so Kraken comes to the lawyers and says, we have Bitcoin on our balance sheet. And Wells Fargo, because of something called Operation Chokepoint 2.0, and that is big banks are basically prohibited from extending credit or even offering bank accounts to Bitcoin mining companies. So I'm sure you, Bo, have dealt with that, just opening up bank accounts and not being able to open up bank accounts with certain of the banks. And I don't blame them. But Wells Fargo was like, Kraken, we got this giant loan to you, and we're not going to continue extending credit to you if you have Bitcoin on your balance sheet. So I think that they canceled the program. And to me, as a secured lender lawyer, like this is what I do for a living, I was just so confused because we just look at assets. I don't care if it's Bitcoin, if it's oil and gas, if it's computers, whatever it is. We're just trying to make sure that our client gets their money back. And unlike, say, real property, when you have to liquidate real property in a bankruptcy, it's a huge pain, right? You got to post notice to the world. You have to do all these special requirements under the uniform code to sell that property. There's bidding. Versus if you have Bitcoin held at a custodian, say it's Coinbase or wherever you're using, and you have a default on your loan agreement, you can just tell them, hey, convert the Bitcoin into cash and pay it off my loan. And to me, it just seemed like a big missed opportunity for the banks. And I just started then researching it and looking more with respect to Bitcoin mining. And then at this time, so I was a seventh year associate at Vincent and Elkins. And at that exact same time, that's when the Vincent and Elkins partnership sat me down and was like, Colin, if you want to make partner here at Winston Elkins, like you need to be an absolute master of the most complex banking, legal, regulatory aspects of these deals. Like there's a reason that your rate is what it is. So here is a set of books that you're gonna have to read, like to perform just as a partner. And I'll tell you that. So I'm already kind of looking into Bitcoin mining, but then I started reading this book called Mystery of Banking. And it was all about sort of like the fundamental rules of money, how fractional reserve banking works. And it was like all the different components of money. I was looking at it. It's like divisibility, transportability, and there's like six other ones. But Bitcoin was like number one in everything. So then I started to just invest a little bit in it. And I came across a guy named Lee Bratcher. So I think Lee was introduced to me through somebody that was in my Bible study, but Lee Bratcher runs something called the Texas Blockchain Council.
Mhm.
They were the group that put on the North American Blockchain Summit that
We
was on.
actually had his wife on a couple weeks ago.
Oh, Becca,
We
yeah,
had Beck on, yeah.
she's great, and yeah. So that event was on your alma mater's campus. But what I told Lee, years back was I have all these bank clients, Goldman, J.P. Morgan, Wells Fargo, Bank of America, and I've been talking to them a lot about this whole Bitcoin thing and perfecting security interest in it as collateral. And he said, "Well, you know what, Colin? The mayor of Fort Worth and Texas Blockchain Council are hosting an event where Maddie Parker, the mayor, is going to announce to the world that Fort Worth is going to be the first city in the United States to mine Bitcoin. And why don't you bring all of your banker friends, and I'll bring the mayor and I'll bring the crypto community, and we'll have this big event." So I literally invited like 300 or 400, I can't remember how many people I invited uh, to this event. And I think, I don't know, probably like 75 bankers came, and then somewhere around 75 crypto people came. But I moderated this panel, and it was this like, it was such a cool event because one of the panelists, Colin Bird, his family owns a company called Jeddah Permian, which is a big oil and gas company, but they also do crypto things. And they also own Fort Worth Tower, like the land. So we were in the top floor of the Frost Bank Tower, and I moderated this panel. It was like Block Phils, Neidig, Jeffries, then Jeddah, and it went really, really well. And that was when Winston Strawn, the law firm that I work at right now, came to me and said, we're opening up a Miami office, and it's going to be largely crypto people like Kim Pryor, Daniel Sabile. They are now the co-heads of the digital asset practice of Winston and Strawn. We just hired them. And by the way, we have this whole structured finance group that's out of LA. We have regulatory people that are in DC, some fintech that's up in New York, and come to Winston and Strawn, leave V&E, and you can join Winston and Strawn and help build out that practice. And I'll tell you, it was really hard leaving V&E because I loved that group. My mentor there, he was just incredible, and I was really looked out for over there, and like wonderful training. But ultimately, I just like they didn't have a big digital asset practice at the time. They have 900 or so lawyers and 600 energy lawyers, so they are dominant in energy, but a little bit lacking in digital assets. So I decided to transfer over to Winston and Strawn, and now I'm so happy because I've been really able to build out this practice, and that's how I came across you as a client. And I love my little mentee, Michael Carlisi, and now I'm doing Bitcoin deals. We have a giant stablecoin client, and get to do deals all over the world and fly all in Miami and LA and New York, Chicago all the time. So that's kind of the long story of how I got into it, Bo. But I don't think I've really told anybody about that before. So I'm happy to be able to explain it on your podcast.
It's I love the story because it's totally backwards from how most people get into it, right? Most people that are exposed to this see it from the money and banking angle. They see the money and banking issues that Bitcoin solves, and then it usually takes, hundreds of hours or a couple of years, whichever comes first, before they start delving into the energy angle. And you came from it first from the energy angle where you saw the waste that was happening in the energy space and how this was a perfect fit as a puzzle piece to actually solve energy problems, and then later on got to discover how much it was loathed in the banking world and the kind of problems that it solved. So for lack of a better phrase, what radicalized you was very different than what usually tends to get people into this space. And since you've been in it now for a few years, I'm curious how, one, how it's evolved for you, how the conversations you've had have evolved, And then two, there's a lot exciting going on right now. I mean, it'll probably be a couple weeks before this comes out, but today is the first day that we've seen Bitcoin at 100K. We've got a new administration coming in that's obviously much more positive toward this industry and kind of creating an environment that makes this a really exciting place to be. So I'm curious how the conversations are going for you behind closed doors. Obviously, no names, but what's new and interesting in the world of big finance and big crypto?
So I want to put a pin in the future outlook because I think that it's probably useful for me to just go through the evolution of it. So, okay, like I said, Wells Fargo's not really into Bitcoin at this time. We presented to Bank of America's asset-based loan group, just talking about, like we know that Bitcoin's not going to be factored into a borrowing base anytime soon, but just in terms of boot collateral, like extra collateral that you can perfect on, here's how you do it. And they were amending the Uniform Commercial Code, it's called, which is like the underpinning of all secured lending to address digital assets. They're saying, the code right now is just inadequate for certain purposes. So we're going to bring in lawyers from all over the country. They're going to come and amend the Uniform Commercial Code, Article 9, and add in this new Article 12. So I was fortunate to be a part of those discussions. And I remember even specifically asking, like, say I'm a lender and I have a borrower that wants to pledge Bitcoin as collateral. Like, how do you do that under this code? So so I'm very familiar with sort of that aspects of it. But I'll just tell you, personally, this is a little embarrassing, but I had a mentee at Vincent and Elkins who was, brilliant from Harvard Law and like very into investing. And he was basically like, hey, Colin, I don't know where you're holding your Bitcoin right now, but there's this really, really interesting crypto company out of Canada called Voyager Digital. And you can buy Bitcoin on here, and not only can you buy Bitcoin, but you can get like yield on cat on USD. I can't remember if it was USDT or USDC or something, but you can get yield on all this like products. And I remember thinking, this is probably like too good to be true. And actually, my mentor over at V&E was like, Colin, this is a Ponzi scheme. Like, what are you doing? Long story short, this was in the summer of, I can't remember if it was like July 2021, but all of a sudden Voyager Digital sent an email to all their customers and said, you can only withdraw, I think it was like $5,000 of crypto a day from your account. And of course, when everyone got that email, everyone's drawn 5 grand from that account every day. And Voyager Digital goes bankrupt.
Mm.
So I had, like I said, it's embarrassing, but I had like almost all of my crypto on Voyager Digital when it went bankrupt. So as a secured lending lawyer, like this is what I do for a living. I was reading all of the like bankruptcy court documents and how it all works. And of course, my mentor over at V&E was like, Colin, I told you, like, so long story short, we ended up getting 70% of our crypto back. So it wasn't, totally deleterious to my financial health. And then after that, I just started investing in Bitcoin a lot every day. So I would just do dollar cost average. I would invest $1,000 every day. And that was like back when crypto was at like, or Bitcoin rather was at, I can't remember, it was like 19 or 20. And it was just because of the, mystery of banking, like this book that your reader or your listeners rather should really check out. I think it was like Rothbard. I don't have it right in front of me, but it just really helped me see the potential for Bitcoin and why it could be used as a very good, solid, stable form of money. But I'll stop there. So I have some outlook for the future, but I'll let you, opine on Voyager Digital or my erratic investing techniques. Who knows?
It's the great irony of having a pristine collateral bearer asset that we would immediately rush to give it away to somebody else. And I'm no stranger to it. Plenty of people on my team, including myself, have had those kinds of stories that, they didn't all work out very well. And some of us lost quite a bit more than 30% of whatever was held on those platforms. But, you live and learn. And that's part of the journey of getting into this space is you realize that it's quite unique that you can actually take possession of these things, that you don't need a custodian necessarily. And it's part of getting into mining as well. It's a very conscious choice. It's a story that I've shared a few times on the show that, getting into mining, I traded getting straight into Bitcoin as a counterparty free asset and willingly took on another counterparty. And if you don't pick your counterparties well, that's a recipe for disaster. So it's one of the key things that we can't really beat the drum of enough, especially as attention comes back to the space and people are looking at how they can speculate, get yield, go for those swing for the fences type investments. And we really can't say enough. Hold your keys to the degree that you can, and make sure that you evaluate your counterparties really carefully.
Not your keys, not your coins. Well, now, Bo, I am like very diversified in terms of where I'm holding Bitcoin, and maybe I can do like a short podcast just all about custody because I have it all. Like with hot wallets, I got Robinhood, Venmo, Cash App, Coinbase, Kraken, MetaMask, Gemini. With cold wallets, I use Treasure, Ledger. I got the ETFs. I feel like I have pretty much every possible way that you can own Bitcoin in my own personal treasury management, I guess. But I just will say, I think it all really just comes back to what we were first talking about with the banks. In that, if JP Morgan could custody my Bitcoin, so you have a lot of sort of Bitcoin maxis on your listener base, I'm sure, so they're probably going to hate this, but I would be pretty comfortable with JP Morgan custodying my Bitcoin, just like they know how to custody my cash and my securities very well. And I think that custody aspect of it is really the last part that has not been figured out. Because like, say my grandma, she's not gonna do a hot wallet. She's not gonna do a cold wallet. She might buy an ETF, but those ETFs, I don't like them so much because they just eat away at your Bitcoin with those fees. So it might be safe, and why it's safe is sort of a complex, Securities Investment Protection Corporation Act and all that. But to me, I think it's really a big barrier for a lot of people getting into it. Is they're just worried about the counterpart point that you brought up, Bo, the custody portion of that.
100%. It's a game of trade-offs like anything. And you said it. I mean, you've got 1,000 different types of custody setups, and one benefit of that is that someone hearing you say how much Bitcoin you might have can't necessarily get to all of it, makes you less of a honeypot. And then just in terms of safety, we have to make the choice as well as a business. It's not a great idea to have your CEO hold all their keys on their person. That's a really terrible single point of failure. So at some point, it does make sense when you're holding institutional amounts of this kind of capital that you're going to put it somewhere where it's very difficult for someone to get at it. And that there's no single point of being able to access it. And not everybody has the technical savvy to go set up a multi-sig wallet. That's just not realistic for most people. I know I've talked publicly about helping my mom set up multi-sig, and it was a hilarious journey of trying to figure that out, not realizing how difficult it really was for people to understand. But you have to meet people where they are, and there's often some perfect solution for wherever you are that might be different, whether you're an individual, a corporation, an institution, whatever it may be. There's a different custody setup that, as much as the Bitcoin maxis have a lot of things right, it's hard to put a one size fits all prescription to everybody.
Yeah, no, totally. Just in the future, and then more and more people are getting into custody. I know Block's in custody now. I'm sure there's a bunch of other companies that are looking at it. And then, once the banks get involved, all those those companies will probably get hired by the banks, like to help them onboard and custody people's assets.
Right. That's been, I mean, for us especially, you can use those self-custody multi-sig wallets. Since you're in lending, you're no stranger to this. When we're working with banks, and it has been tough, by the way, to get banks to be okay with Bitcoin mining businesses. We've thankfully been really blessed in finding the right partner on that front who are totally on board. But if we ever want to use that Bitcoin to collateralize, we're not custodying that with Unchained, or we're not self-custodying it. That's going to be collateralized with that bank, with that custodian. And that truly is, it's one thing that companies right now need to solve to make it more accessible for people, but it's also the gateway to being able to use this as what it really excels at, which is being pristine collateral that you can actually borrow against and go use in the marketplace.
Yeah. Yeah, yeah. So the way that it's working right now, so this can change, I'm sure, maybe in the future, but one of our clients, so this is public, so I can talk about it. Hankey Capital, they about 2 years ago came to me and said, "We're in the business of real estate loans." And Don Hankey, who runs that company, has always been at the forefront of technological advances, and said that a lot of our clients, high net worth individuals, they are looking for real estate loans, but they also have massive Bitcoin holdings. And they want the opportunity to be able to post as collateral for a real estate loan Bitcoin. And can you, Colin, help develop this program? And I was like, well, it's perfect. This is what I've been focused on for many years now, and I'll help build out this crypto custody loan program for you guys. And they had already been using Coinbase as their custodian for Bitcoin anyways. So what I did with Hankey and Coinbase was negotiate the form of control agreement. So that's like, you got your borrower, you got Hankey, and then you got Coinbase as a custodian. So the borrower would post an equivalent amount of the real estate loan as collateral with Coinbase. And then Coinbase, Hankey, the lender, and the borrower would sign an agreement that says if you default borrower underneath our loan agreement, then we can tell Coinbase to liquidate the Bitcoin, convert it into cash, and then send it over to Hankey. And why that was interesting was, so one thing is like, one thing people will say, well, who in their right mind, would be a borrower that would sign up for this program? So in other words, say you got $100 million real estate loan. Well, Hankey's having you post $100 million of Bitcoin. So you might be like, why would a borrower ever do that? Well, number one, the borrower's long Bitcoin, so they're not selling it anyways. And number two, in terms of the business deal, Hankey before would only give you 90% of the loan. But if you're posting the equivalent amount of the loan as Bitcoin, they'll give you 100% of the loan in cash, and then they'll also give you better terms with the interest rate. So that's why borrowers like the deal. And then Hankey, of course, was very pleased with the situation because they have a first lien on the real estate, but then they also have a first lien on the Bitcoin with Coinbase. And they liked the program so much that they had us do the same thing with their luxury auto program, where say you got a $5 million Bugatti. Well, you get a perfect security interest in Bugatti, but then you also get $5 million of Bitcoin that's posted at Coinbase. And the reason that they loved it from the lender perspective was apparently in the luxury auto market, borrowers are all the time like hiding the cars, shipping them to Mexico and stuff. Well, the lender was basically saying, keep the car, we'll just take the Bitcoin, pay off the loan, and then we'll be on our way. But very interesting things. Until the banks get involved, you really have just a very, very small group of lenders that are extending credit to the Bitcoin mining space and then just incorporating Bitcoin into their balance sheet. But I think, in fact, I know that in 2025, with the new administration coming, there's going to be major changes in the regulatory framework. So looking forward to seeing what those changes are and kind of when they get implemented.
in the past, or even with some providers now, if you want to collateralize your Bitcoin, the interest rates on borrowing against it are astronomical. I mean, absolutely crazy to borrow on your Bitcoin. And what we've seen happen is, as it's gotten more institutionalized, we've seen those rates come down more to earth and more in line with other types of assets that you would collateralize. But you said something interesting, which is that if you were to post Bitcoin along with your real estate in this loan, that you potentially can get lower interest rates than even standard. Do you see that as a trend that continues to evolve, where the people that do have this kind of collateral actually could access the best rates in the market?
One thing I would always keep in mind when you're thinking about interest rates is what's your source of capital? If your source of capital are deposits at JP Morgan, like go and pull your JP Morgan bank account, your checking account, and see how much interest you're earning on that account, and you'll be able to tell it's like nothing. So if a bank is extending credit, then they can provide SOFR plus 1 or 2% loans, and that spread between their source of capital, the checking account, deposits, and the cash that they're deploying is still wide enough. And by the way, those are the deals that are fun. Like that's my world. That's the deals that I like working on, where you represent a lender or a borrower and it's an interest rate that's not predatory. It's such that it can accelerate trade cycles and you can help actually grow and expand your company. Like that's what I'm in the industry for, helping my friends and my clients build very strong companies with liquidity and good cash positions. Now, when you cut out the banks, you're not just cutting out bulge bracket banks like we were talking about. You're cutting out any financial institution that is sourcing capital from the banks. So that's like MidCap, Eclipse, like the big funds, the big private debt funds. All these funds are sourcing capital from banks. So none of those institutions can extend credit either. So what are you left with? You're left with institutions that are sourcing capital from investors, and when you're sourcing capital from big time investors, well, that cost of capital is like super high because they're looking for a return. When you extend credit, then based upon your source of capital that's very expensive, that's why you have very expensive debt. So you can go up and down the public Bitcoin mining company market. Like you can just pull all the different credit facilities of the 20 or so Bitcoin miners. And to your point, I mean, it's like eye-watering interest rates. Some of these are my clients, so I'm not going to disparage any of them, of course. But it is not such good terms for the borrowers in those deals. And I think one of the contacts that I have over at an alternative lender was like the best loan product in the market right now is over collateralized loans to public Bitcoin mining companies. They have all these assets, they have massive Bitcoin holdings. You can extend credit, you can extend 25% of the value of their assets to these companies and be able to recover your loan. It's very safe. So I do though think that's going to change, and the institutionalization part of it, like as more big institutions become large equity holders in these public Bitcoin mining companies, they're probably going to take a very careful look at the cost of capital structure of these companies and just say, we're not going to have you guys be sourcing capital for this high of an interest rate anymore. But it's really all to me downstream of the fact that the banks are not able to right now hold Bitcoin on their balance sheet as an asset. And I think literally like everything flows down from that, literally like an accounting thing. Because right now, so this is like that SOB 121 bill that Biden vetoed. It basically is now, if you want Bitcoin to be on your balance sheet, banks, they say that you can have it, but it's a liability and you have to offset the liability. So in other words, you have $100 million of Bitcoin on your balance sheet, then you need to have $100 million of like US Treasury backing that. And the banks are like, well, why would I do that? Like, that makes no sense to me. Like, I'm just not going to do that. And if that simple rule gets changed and the Fed green lights uh, banks to have Bitcoin on their balance sheet as an asset, all of a sudden, Abundant Mines, you guys over there, all the public Bitcoin mining companies are all of a sudden going to be opened up to cheap debt to actually grow these companies, which they need to actually expand and have companies like yourself grow to the full potential.
So I think you just answered it a little bit there, but would you say that we're still in choke point 2.0, or that we're out of it, or that we're coming out of it? How do you see where we are right now at the end of 2024?
A part of me is thinking, so Paul Ryan pointed this out and saying, like, we're getting a new chair of the FDIC, we're getting a new chair of the OCC, new chair of CFTC, new chair of SEC, chair of Treasury. So that's Cantor Fitzgerald. He is obviously very pro crypto, one of the largest stablecoin companies in the whole world, uses them as their primary custodian in the United States, of course. And it seems to me more and more of the heads of these big regulatory agencies are going to be pro crypto. And it's so funny, Bo, because, you know, like my mom was talking to me about Sherrod Brown in Ohio and saying, how could this Ohio senator lose this race? It's so wide. I mean, he's been in the Senate forever. And I was like, Mom, it's because he was on the wrong side of crypto. For some reason, he's like Democrats are fanatically opposed to crypto. And because of that, the crypto community backed his opponent, I think it's Moreno, and won. So now Sherrod Brown, who was, I think, the chair of, I can't remember his financial services, but it was some important committee in banking. He's now not going to be the chair of that. So I think to answer your specific question, I don't want to count my chickens before they hatch. And I'm not going to sit here and say like it's over until some accounting issue like I just talked about gets changed. Until I strike a deal representing Wells Fargo or JP Morgan and Bitcoin is part of the collateral package, I'm not going to say that it's over. Once I literally see a bank extend credit, which by the way, I mean, the market's wide open. Like there's 14, 16, 25% interest loans in the public markets that any bank can come in and refi that out for 1 percentage point less. And then you get just an army of bankers who do this for a living. You know, like all that capital, all that cash, all that expertise, all that knowledge about lending is just, it's completely cut off from the sector right now. And that's also, by the way, why I'm very bullish on the price of Bitcoin. Not that I think that that's absolutely the most important thing. And I don't think it's so, interesting to even talk about the price of Bitcoin because anybody in the world can just Google price of Bitcoin, just they can just tell you it in a second. I think it's interesting to talk about the value of it, but also, what's missing? Who are the big players that are missing from the Bitcoin sort of world? And I would say the number one is the United States government. Like the United States government owns gold. They own all sorts of stocks. They own land. They own all sorts of assets. And I think other than like the crypto that they seize via the DOJ, I don't think that they have any Bitcoin at all. So like if the US gets involved in Bitcoin, then I think other countries will follow. I think Michael Saylor brings up the point of when you're thinking of the United States and what the rest of the world is doing after the United States, like the United States starts to build cars, all of a sudden the rest of the world wants cars. The United States starts to build airplanes and airports, and the rest of the world starts. So I think that whole strategic Bitcoin reserve, which we're really hoping actually happens, once the United States say I think that's over the course of 5 years, they're going to buy 1 million Bitcoin. I don't know how they're going to do it or if it's actually going to happen, but imagine what that does to the price of it. And then once the U.S. is involved in it, then the banks get involved in it, and then all of a sudden you're going to have a massive source of of capital inflows into that, and it's supply and demand, Bo. So
And there's a fixed supply, so there's only one way to go. So obviously you're bullish. I'm quite bullish. I've been bullish for years. I think we've got a lot of tailwinds that are helping this industry make it much more attractive and much more interesting. And honestly, it feels like it's our game to lose at this point. So, in the context of knowing that anything can happen at any time, what do you think are the most important things that mining companies like ours can consider to be successful in this administration and making the most of the opportunity? And I say that because most of the people listening to this are either mining entrepreneurs or they're looking at in some way getting exposed to mining as an investment. And obviously there's risk to everything, but we want to do whatever we can to seize the opportunity and mitigate those risks. And you've seen things go well, you've seen things go not so well in this space. So I'm curious what your outlook is on the best things to do and the things to certainly avoid if you're in the space.
well, so two things. One is the pivot to high performance computing and AI, which to me is like a fundamental divide that you're seeing in the Bitcoin mining market. So of course that's the idea of Bitcoin miners, in case you didn't know, use a massive amount of power. And now it seems that they've realized, because there's an arms race for power by the hyperscalers, that's Amazon Web Services, Google Cloud, AT&T, like there's all these companies that are now looking at artificial intelligence, high performance computing, and they see just an insatiable demand for power. And I think that some of the Bitcoin mining companies, Cypher Mining is the first one that pops into my mind, of saying, we're Bitcoin miners and we are long on Bitcoin and we're going to continue to mine Bitcoin, but we're also not going to cut off free cash flow. And free cash flow comes from, if you sign a contract with Amazon Web Services and say we already have this power infrastructure, this data center, turnkey data center already ready to be built, and you guys can come in and pay us in cash for this. Well, number one, all of a sudden you have free cash flow. Like if you're mining Bitcoin and you're just stacking Bitcoin like Mara does, then you have a massive Bitcoin supply. You're not wanting to sell that much of your Bitcoin, maybe sell some of it to pay salaries and to cover some operating costs. But generally, the Bitcoin mining companies that are holding a lot of their Bitcoin, how do they get financing? Well, they do at the market expensive equity offerings. And I think when you understand how the equity offerings are operating right now, these at the market equity, like if I'm an equity owner in a public Bitcoin mining company, the second that they do those at the market equity offerings and offering equity, you just get diluted again and again and again. And hedge funds love it, right? Like when they hear an at the market offering coming down the pike, a lot of them just short Bitcoin mining companies. So I think if I'm a Bitcoin mining company, I would for sure be thinking about all of my different sites, where are they located, and then whether a portion of my Bitcoin mining capacity can be pivoted into providing power for the hyperscalers. And if you don't believe me that it is just going to cause your stock to go crazy in the market, your listeners who don't already know should read the story of CoreWeave. And the story of CoreWeave, of course, is that they were mining Ethereum, and that's all they did was mine Ethereum, GPU mining. There has to be close to fiber, like low latency. All these are redundant power type facilities. Well, when Ethereum switched from proof of work to proof of stake, CoreWeave was basically screwed, because now mining Ethereum was like not profitable whatsoever. But what they found was they could just repurpose their Ethereum mining sites and provide power to Amazon. And I think it's Amazon that's like their big counterparty off taker, but it could be somebody else. I don't have it right in front of me. But CoreWeave went from like a $2 billion company to like a $40 billion company in less than a year or something. And that's because the market loved it when they heard that sorry, that's definitely Microsoft. Microsoft and CoreWeave signed the deal. And I think that that's a good example of if you pivot a portion of your capacity and all of a sudden you have Microsoft on your cap table and they're paying you as a company, that could be a big opportunity. And then the second thing is just so you deal with this all the time, Bo, because I know you guys do a lot of hydro stuff. Is finding the right places to build your capacity and find the cheapest kind of source of power. So I've done deals. I mean, down in Paraguay or in Australia, Norway, New Zealand, all over the world. You can find different ways to find really cheap power. It's unclear to me whether the unfavorable tax situation in the United States will be remedied. That, of course, is when you mine Bitcoin, you're taxed immediately on the Bitcoin that you mine. You're very well aware of this because I'm sure you don't love it. It should be the way that you mine gold. Like if I go out and I mine gold and I grab my little gold bar, then you don't get taxed on the gold in which you get taxed when you sell the gold. So I think there's some really interesting things you can change with just the tax structure.
Mhm.
And who knows what the Trump administration is going to do. Maybe they see Bitcoin as a strategic part of the American ecosystem and give favorable treatment to the Bitcoin miners. I don't know if there's going to be credits or a program for it, but the one thing I'm really fascinated about, so the miners love building in West Texas. That's like in Pecos and Midland, Delaware Basin, in the middle of nowhere because of just how much natural gas they have down there. I was just reading about Spain, and I mean, I would love to be spending my summers in Barcelona or Madrid. And the reason I'm bringing it up is because I actually worked at the American Chamber of Commerce when I was in grad school, and my mandate while I was in Barcelona was to build out U.S. solar in Spain. Well, now Spain has like a massive amount of solar power, and they overbuilt. So the price of energy a lot of times in Spain will be negative. And I mean, you know this. Like if you're off taking power and you're paying you to take the power, I think that that would be a really good opportunity. I don't know about the regulatory market. You know, you'll have to hire Spanish local counsel, and there's going to be some like cost associated with that. But if someone gave me $500 million to go and build Bitcoin mining sites all over the world, I mean, I feel like I would go to Spain. Alaska though too. I mean, how much energy is up there? It's freezing. You could have the Bitcoin miners just sitting out in the open. You don't need any liquid immersion or fans. You know, that's something I would be interested in. But Bo, talk to me. You know, where are you guys looking to build?
Oh
One
my
thing
God.
is that there's a lot of hydro plants. So one of my partners that's out in DC brought this up to me. He said that, well, Colin, there are hydro plants that are up for license renewal. And if they can't show they have off takers, like sufficient off takers, then they'll have to close the hydro plant. So, I mean, if you got a list of all those different plants and approached one of those companies and said, look, like, we'll take your excess power, you know, that could be very interesting. Then I was also interested in that one thing that I texted you about, Bo, was putting solar panels on the dam reservoir, and so that like makes a lot of sense to me because it doesn't clutter the beautiful landscape. Like it's already a reservoir, and then the water would already naturally cool sort of the panels and stuff. But I'm looking forward to seeing what you guys do at just with abundant minds and what other creative companies are doing because it's really not that complicated, Bo. It's just like finding the cheapest amount
No.
of power as you can.
And it's so, I mean, you hit on a lot of different things. It's going to be hard to tackle everything one by one, but no, You mentioned it already, which is there's the energy source, there's also the surrounding environment that you're in. So Alaska, Pacific Northwest, I mean, we've got tons of hydro and all kinds of energy. And on top of that, we don't spend nearly as much on cooling throughout the year as you would in West Texas.
Yeah.
And there's no shortage of energy at all, and no shortage of very clean energy. Um, so there's no, we'll have to talk offline about being an off taker for all these hydro plants, because that's exactly the kind of thing that we want to do. And I love the micro solar idea that's behind the reservoirs, because not only could use essentially double spend energy that's already occurring there, but we have some parts of the Columbia where there's quite a bit of toxicity, so you could really hook up even water purification to be powered by that solar. And what I love about mining is there's so many ways that you can integrate into your environment, whether it's spending your waste heat to heat greenhouses in the Northwest that'll grow fresh food for your local communities, um, heating people's pools and spas and saunas, and maybe you can mention that for a second as well,
Yeah,
because I
thank you
know.
for bringing that up. Okay, so this just happened yesterday, and I haven't brought it up to the leadership of the YMCA, but I was just elected, big news, of to be a board member of our local T Boone Pickens, which is a giant oil and gas family YMCA, and they were talking about the costs associated with heating their pool, and then they have saunas and steam rooms. And I asked them, because apparently this is like one of their main costs. I said, "Have you guys ever heard of Bitcoin mining before?" And and none of them have had any experience with it whatsoever. But I was just thinking, like, what if the pool was heated with Bitcoin miners? Like the YMCA bought Bitcoin miners. We hired somebody like you, Bo, to come down here and set it all up. It seems, and then all of a sudden you're offsetting a portion of that energy cost with the Bitcoin that you're mining. I haven't seen that kind of large scale. Like some of my friends, they heat like their own hot tubs with them or
Yeah.
something like that. But it seems like there's going to be more and more of just very interesting things that are being incorporated into the Bitcoin mining space. And one thing I'd be interested about, part of what you guys are doing at Abundant Minds that is very interesting to me is a lot, well, not a lot of it, but a portion of your capacity is kind of for individual like people. And why I'm interested in that is if you get number one over 100 customers, you can be a REIT. And when you're a REIT, you have all sorts of favorable tax advantages. But also, tell me more about how it works, because maybe you covered it some in your some other podcast. But say I wanted to start mining Bitcoin through Abundant Minds. I know that there's a consultation that gets set up, but say I want to allocate, I don't know, say $1,000 every month towards this operation. Tell me about how it works, because I'll sign up for your program.
I love it. Well, we try to make it as easy as we can on people. Our website's abundantminds.com if you want to check out and get a consultation. But essentially, the way it works is you put in cash, whether it's a wire transfer, we do take Bitcoin payments. We'll get machines for you, hook them up in the facility, manage them full stack. You mentioned having a personal goal of getting Bitcoin mined per year, which would be something like 15 or 20 machines, which would be around 150K up front. And a Bitcoin right now is 100K, so you'd expect that you've broken even on what you would have bought a Bitcoin for within about a year and a half. And the whole purpose behind mining, or at least part of it, is you're getting Bitcoin at a discount, right? When you're spending energy and you're actually producing it natively, a Bitcoin might be trading at 100K, you're mining it for 40 to 50K all in. And if you do that for 2 to 3 years in a row, right, that's not an immediate thing. You're doing this over a longer time horizon. You would expect that you end up with more Bitcoin over the long term than you would have if you just bought it outright to begin with.
Yeah.
And we talked about tax for a second. Obviously, we hope the tax law changes with the income as soon as you get it, and then having to pay a cap gain if you ever sell that Bitcoin. But what's interesting is, and I'm not a CPA, so factor that in. But you are buying physical equipment that depreciates quite quickly, and
Yeah.
the U.S. has tax codes that allow bonus depreciation. I think 2024 is still 60%. So if you're buying, say, $100,000 worth of equipment, you get to write off 60,000 of that essentially immediately. And then you've also got the operating expense of the electricity. So if someone's already looking at building a Bitcoin position, let's say they've got a quite impressive balance sheet and they want to figure out how they can acquire more Bitcoin at a discount and maybe offset some of their income tax bill, just buying the equipment might be a more favorable way to start building that Bitcoin position, and you're getting it at a discount. So we've found that to be a pretty interesting strategy for some of the more high net worth investors who've got some income to offset.
So that was actually uh, one of the questions that I asked on this Bitcoin mining and capital markets panel was like, if you as a Bitcoin mining company are essentially dependent on the price of Bitcoin going up, why would I invest in your company instead of just buying Bitcoin outright? And that was the answer that you gave that was given on the panel was essentially like, Colin, we are accessing Bitcoin for a lower cost than you can buy it in the market. If you look at the hash price, that's the reason why you would invest in us and not MicroStrategy or Bitcoin itself is because of that fact. So I'm glad that you brought it up, and I'll try your program, Bo. I got some excess capital to give over to you guys.
It's an interesting tax lever that you can pull too. And again, I don't make any recommendations or financial advice to anybody without checking with your CPA to make sure that what I'm telling you is true. But
I'd be able to, sorry, so would I be able to depreciate? Like, is that my machine or is that your
your
machine?
machine. So if you decide that you want to take it and go heat your pool with it, we'll ship it to you. So you're free to do with it as you please. You just have someone who's operating it for you, who's making sure that it's managed and you're not taking on a second job by buying a Bitcoin miner.
Okay, okay. Yeah, that's cool. I like it.
One of the things, we started to mention it is the integration of Bitcoin mining into all these other industrial uses, whether it's for heat. Um, I love the greenhouse use personally. That's going to be one of our sites that we're finishing over the next couple weeks. Is that we'll actually heat a greenhouse with it. The pool is a great idea. Please put me in touch. We'd be happy to heat the YMCA.
Yeah, let's do it.
And it's funny because I still think that we're super early on this trend until every home in the Northwest has a Bitcoin heater that's either heating their water or heating their home. It's either an offset or it might actually help you make money while you heat your space. And that to me is just such an obvious trade that the fact that it's still relatively unknown and so few people are doing it. I know we just crossed 100K Bitcoin, but it's funny how early we are in terms of all this. And I'm just excited for an administration that actually sees the potential of this. And Trump even mentioned a few times, I'm going to misquote him, but something like, "We want all the Bitcoin mined in America, and you're going to get so tired of us being so winning on energy that you're going to ask me to stop giving you so much energy." So there's been a clear support of advancing energy policy and helping us lead in this rather than sort of being choked out and shoved into less safe jurisdictions than the U.S. where people can do business pretty reliably.
Yeah, totally. So the one thing that I would point out just in the energy part of this is there's all these companies that are coming out with new satellite technology to be able to spot methane emissions.
Mm.
And just going back to how I got introduced to Bitcoin at the beginning, when you have these satellite images and you go over the Permian Basin, like fly into West Texas, fly into Midland, and you can just see like the methane kind of rising up. And that is just the most obvious thing to me of if you're flaring gas or if you're just letting the methane float into the atmosphere, and these conversations are more difficult than you would imagine with the oil drillers. And I don't know exactly why. Maybe they don't understand it, or maybe they kind of don't believe in Bitcoin. They're all baby boomers, and they don't want to learn something new. But that, in terms of like an environmental part of it, because of course when you're converting it into electricity, so you take the methane and then you put it through a Waukesha generator, you're combusting 100% of the methane that is leaking out of that wellhead rather. And instead of 100%, if you let it leak out, then all of that kind of go. And then when you flare it, only I think it was like 92% of the methane gets combusted into CO2. So I would kind of start there. There are some really, really great companies that are interested in that, but the idea of having Bitcoin miners in everyone's house. I'm from Chicago. It's freezing cold. Like how much Bitcoin mining is being done in Chicago. I don't know if any is being done, but they should start incorporating that in. And I just think in America, especially because the new I can't remember if it was Treasury or the new somebody that Trump appointed said we're going to have 3 million more barrels of oil sold every single day. And I think that if that's the case, there's ways in which you can make oil and gas development, exploration more profitable or profitable in the beginning if you incorporate Bitcoin into the oil drillers' economics. Whereas if you're drilling in the middle of the Bakken again and it's not economical, well, if you all of a sudden incorporate Bitcoin mining into it, maybe it is. Or maybe there's wells that aren't economical because the price of natural gas is so low. Well, if you incorporate Bitcoin again into that, then you can frack the well, start producing gas, and then sell a portion of that gas to Bitcoin mining, and then sell the other portion to a natural gas combined cycle. There's just lots of ways in which I think Bitcoin mining can actually help companies. And with the vibes and the stigma associated with Bitcoin changing with this new administration, I mean, Trump, to your point about he's going to give us more electricity than we want, I was sitting there and I remember him saying that, and it was just quite encouraging because when you come from the world of traditional banking and you're at the dinner table and you're with all these banks that don't really want to listen to you harping on about Bitcoin and Bitcoin mining and this natural gas flare thing, it was just encouraging to have the leader of the free world speak positively to us and call us like yourself, Bo, you founded this company. I mean, the modern day Rockefellers and Carnegies and Henry Fords, that when these people were starting those industries, it was kind of not so favorably viewed. And just sticking to your guns, knowing that there's some action here. I commend you, Bo, for building this company, and I will be here helping you build this company as fast and as efficiently and as well as you can.
Appreciate you. Appreciate those words, and just appreciate your help in general. It's been invaluable to get. Uh, you know, this is still an early stage industry, but go from essentially people operating out of their garages and warehouses to slowly becoming an institutional base and part of the infrastructure of how the free world works, and we need everybody's help that we can get. And there's no us versus them. It's really just it's all us. So ultimately, these people that have been resisting us for years, the hope is that they share as much in the prosperity as the people who've been early, because we're just trying to build a better world. And I guess as we wrap up, my kind of closing question to you is, what do you think is the biggest opportunity that's coming down the pike for us as an industry, and just the Bitcoin space in general, that we should all be paying attention to?
But there's so many, Bo. I think there's a lot of very interesting things happening in sort of the layer two world with Bitcoin. I do a lot of stablecoin lending, and I could foresee that kind of expanding and growing, strengthening the US dollar. I think interestingly, Jay Powell came out and said that he doesn't see Bitcoin as a threat to the US dollar, that he sees it more akin to gold. And I thought, so maybe that's why the price of Bitcoin went over $100,000 with him just saying that. I say that the biggest opportunity in Bitcoin, not to sound like a broken record, but I would just look at the public Bitcoin mining companies and the existing credit agreements that they have in place. And if I was JP Morgan or Wells or one of these big banks, Bank of America, I would just find a very asset heavy, which is most of them, Bitcoin mining company with a very, very high interest rate credit facility and refi that out. And I think that that probably from the lender side is the biggest opportunity in that you can get a very over collateralized loan for a very, very high interest rate. And when you help these companies build out their capacity, I feel like from the bank's perspective, they will have the Bitcoin as collateral, which right now, like we talked about, they don't really see any value in Bitcoin itself because it's a liability on their balance sheet. But also, like the refurbished machines, how many machines are being thrown in the trash where they could be reused for some other purpose. I see a lot of opportunity in like the recycling of those. I think there's gold and palladium and nickel. I don't know what you guys are doing with your
You can
excess.
always use them for heat. Even if they don't make a ton of money, they still make heat
Yeah,
and some money.
there's a bunch of whatever S9s or something, and you can heat your house. But I'm really excited for the future, Bo, and thank you for letting me be on your podcast. And I hope I can join again sometime.
Man, I appreciate you taking the time. And as we close up, is there anything that you're currently working on that you want to highlight? Any projects you want people to keep up with? And how can people find you if they want to get in touch and either get some counsel from you or, help you on something that you're working out?
Yeah, my contact is on Google, so you can email me. Colin McVicker is my name. You can Google it, and it'll take you to my Winston Strawn homepage. C McVicker, CMCVICKER at Winston.com. And I'm working on pretty much any sort of indebtedness if you're on the borrower side or on the lender side and it has anything to do with crypto, whether it's Bitcoin or a stable coin or world coin, off the wall coins, I can help you perfect security interest on that. And I can help you get some extend credit based upon that. And yeah, thanks again, Bo. Appreciate the opportunity and talk soon.
Thank you, Colin. Can't wait to talk. We're at 200K probably in 30 days.
Yeah,
All right, everybody. Hope you enjoyed this. Colin just shared his contact details. They'll be in the description as well. And keep up with what he's working on. Colin, can't disclose all the things that he's working on, of course, just because of attorney-client privilege. But rest assured that anything big that's happening in the space, he probably has an ear to the ground on. So, good person to have in your network. And appreciate you sharing your time, man.
yeah. Thanks, Bo. Talk soon, my friend.